There I was, sitting at the boardroom table with my boss, and his boss, my manager, senior manager, and partner with KPMG, not to mention a host of lawyers, all men, and the CEO and COO of the insurance company whose future was in question. And I was sweating through my starch shirt right into my pinstriped suit. Yes, I looked every bit the part of the newly minted CPA that I was back in the 1990s. And I couldn't believe my ears. My partner was looking at me. "So, can we agree on 3.5 million?" he asked. "Well, we can agree on anything we want," I said, "but the company will only collect 900,000 at the most because that's all they've invoiced." Talk about a career-limiting move. That's when I knew that it was time for me to leave KPMG, and that's also how I learned about organizational silos and the damage they can do. You see, I had one job. I had to prove that the company we were auditing really had at least 3.5 million of the 5 million that they posted in the accounts receivable balance. Because if they didn't, the state of Massachusetts was going to put them in receivership and lots of people were going to lose their jobs. Now, this was a company about 30 minutes outside of Boston where almost everyone who grew up in the town of Wakefield went to work after high school or university. This was a company where everyone knew each other and everyone got in each other's business. And I had one job. When I was first assigned to this job, to this company, I donned my little pinstripe suit and went about doing my audit test to prove that the $5 million figure on the balance sheet was in fact correct. I chose random but statistically accurate entries in the accounts receivable register, and I asked to see the invoices, expecting the journal entry and the invoice to match. Yeah, like it should. Now, normally, you'd expect almost all of these entries to match with just a few variances. After all, how hard is it? Back in those days, pre-computer, a copy of the invoice, which was generated by the accounts receivable department, just should have been sent to the general ledger department so that the journal entry could be made and to match the invoice. Bob's your uncle. But something was very definitely wrong with this picture. None, and I mean none, of these invoices match the journal entries. How is that even possible, I asked myself. By that point in my career, even though I was a newly minted CPA in a pinstripe suit, I knew that I was a terrible accountant. So I wanted to make sure that I wasn't missing anything. I showed my manager what I'd found and asked him what to do. He told me to make an appointment with the head of the general ledger department, who wouldn't take my call. So then he told me to make an appointment with the head of the accounts receivable department, who wouldn't take my call. I thought it might be time to get creative. Like I said, even though I was a newly minted CPA, I also knew that I was a terrible accountant. Luckily, I knew that I was good with people. So I did what any newly minted CPA in a pinstripe suit would do. I stalked the break room. Anytime someone from the general ledger or the accounts receivable departments wandered in, I'd strike up a chat. Now, it took a week or so, but eventually I worked out what was happening. You see, instead of the normal way of booking journal entries from a copy of the invoice generated by the accounts receivable department, the general ledger department developed this whole Rube Goldberg kind of process that went something like this. Becky in the general ledger department would have lunch with Chris in the accounts receivable department every Tuesday at 11:30. Yes, they eat lunch early in the States. Chris would then tell Becky what clients the accounts receivable department was invoicing, at least which of the clients he remembered, which even he admitted wasn't all of them. Now, he was under strict instructions by his manager not to divulge the amounts that they were billing. After all, why would the general ledger department need to record the correct amount in the balance sheet? I mean, it's just for accounting purposes, right? Nobody relies on these figures. Becky would then take this information to her coworker, Pete, who would go through the client contracts for all the clients that Chris remembered having billed that week. Pete would then put this information into a giant spreadsheet which calculated the client's past spend and run through this series of formulas that, when pressed, he admitted had very little validity to guess at how much he should actually record in the balance sheet. Now remember, This process could have been avoided by simply getting a copy of the invoice and recording the correct amount as billed to the client. Why did they go through all of this cloak and dagger, all these machinations then? Well, that's what I wonder too. Another few days in the break room unpacked the story. You see, like most people who worked for this company, the head of the general ledger department and the head of the accounts receivable department grew up in Wakefield. They grew up together. In fact, they were the same age. And they went to the same high school. But they had more in common. They both played high school football. And to make things a bit more interesting, they were both dating the same girl. Bet you saw that one coming, didn't you? Apparently, this information came out at a rather inopportune time. It came out on the football field right in the middle of the game. Needless to say, neither the future head of the accounts receivable department nor the future head of the general ledger department were impressed by this information, and a fight ensued. Battered and bruised, they both walked off the field and vowed never to speak to the other again. 26 years later, they were true to their word, which is why Becky had to have lunch with Chris to pass incomplete information to Pete for him to feed into his incorrect spreadsheet to make a series of incorrect journal entries that brought down a 100-year-old company. And apparently, neither one of them got the girl. Organizational silos can be deadly. Where are yours, and what are they costing your business?